All right, hey everybody, this is John and welcome to the free video. Spent a lot of time in the premium video discussing current positions and what I'm looking for there. So in the free video, just want to look at the S&Ps here. They've been very quiet, but also keep in mind is that they have also lived within one ATR up or down from the mean on the daily chart since pretty much for the last month. Okay, and you know we did kind of ease down into 2 ATR here, but so that's been our world here. And so the question is, are we going to actually finally be able to push into a 2 ATR move here? Are we going to consolidate, continue to consolidate? I do think like the S&Ps and the Russell and the Dow actually have the potential here to kind of keep pushing higher. But if we look at the NASDAQ in terms of this point of view, you can see that we've come up to 1 ATR, but we've also come all the way down here. And so I do think that the S&Ps and the Dow and the Russell here actually look fairly strong, and then the NASDAQ is looking tired. So that just means that, I mean, there's a lot of stocks out there that I like on the tech side. Facebook looks fantastic. Alibaba looks fantastic. And so on some of these, just because I'm looking for the NASDAQ to slow down a little bit, what we've been doing is a strategy where you get options that are a little bit further out. In the case of Alibaba, 36 days out, which we like this for a potential run into earnings. And you can see here that this continues to do well, but by selling, this is like a rental property, so we're selling the 150 calls that expire tomorrow, and in a perfect world, those expire worthless, right? So if the perfect thing could happen with Alibaba is tomorrow it closes the week at 149.75, these expire worthless. We collect this rental income on our longer term property, and then even roll it in next week. Okay, that's the perfect scenario. The best scenario is that Alibaba explodes and closes at 152 tomorrow, and then we just close out this whole position in and of itself. It's just our gains are capped. Then of course the worst case scenario is that it's downgraded tomorrow and falls 10 points. Well, we still make our money on these calls, but of course we get hurt here, knock on wood. So doing that a lot, like Facebook, same thing. We've got some call options on there, and then selling these against it as kind of a rental property. So that's kind of the main type of trades. The other ones I like here, there's a couple here like, let me get the other chart. Where did it go? Where did it go? There it is. So one here that I really like too is Vive. You can see here we've got a daily squeeze. Today we came back to the 8. We've got a nice cup and handle pattern. So I am looking for a move to the 1272 extension, which would take it to about $71 or so. So just buying some longer term in the money options on that. And then from there, just kind of looking and seeing how some of the bigger stocks here are behaving. I mean, Apple's finally perking up. Apple, of course, is part of the NASDAQ. It's part of the S&P 500. It's part of the Dow. It's got a lot of pressure there. And it's got a squeeze here. So one thing I like here is that while tech looks tired, if Apple gets going, that could actually really benefit the Dow. So for the first time in a while, I'm actually interested in potentially buying some call options on the diamonds and seeing if they can get something going there. All right, so tomorrow's Friday. I'm looking for quiet Friday, but some potential selling on Tuesday and Wednesday of next week. This is something that we have seen during monthly expiration as these large derivative positions get unwound. So we just want to be cautious and prepare accordingly. All right, you guys have a good one, and we'll see you at the next update.